Welcome back to the deep dive. Today, we're jumping into something pretty interesting, the Q2 FY26 earnings for Radico Khaitan. And the numbers are, well, quite something. We're talking a massive surge in volume, but also expanding margins.
Exactly. It's not just a good quarter. It feels like, a really well-played strategy coming together. They managed to balance two very different things at once.
Right, and that's what we want to unpack today, isn't it? That balancing act.
That's the mission. How did they boost those high-margin premium brands and simultaneously grab this huge, almost sudden volume increase driven by, well, regulatory changes? We need to look at the specific products, the innovations, and, yeah, those policy shifts the source material talks about. That's what really made this quarter a record one.
Okay, let's start right there with the big numbers, the headlines. Total IMFL volume, Indian-made foreign liquor, up 37.8% year-on-year. That took them past 9.3 million cases. I mean, that kind of volume jump, it's almost hard to believe.
It is huge. And crucially, didn't kill their efficiency, which can sometimes happen when you chase volume, right? Revenue from operations, net revenue, was up 33.8% to nearly 1,500 crore. But the EBITDA, that jumped 45.4% to a record 236 crore.
Wow.
So yeah, bigger scale and better profitability. And that's the sweet spot.
Okay, so let's tackle the premium side first. That seems like the foundation, the long-term value driver. They hit their highest ever quarterly volume for prestige and above brands, P&A.
Yeah, highest ever. That's not just like ticking up. It's setting a new bar.
What does that signal, really?
It signals that consumers are definitely trading up. They want better quality. P&A volume grew 21.7%, almost 3.9 million cases.
Yeah.
And the revenue from that segment grew even faster, 24.3%. It's all about the brand strength.
Yeah.
And yet, Magic Moments vodka, that's really the anchor there.
Magic Moments is, yeah, clearly the star. Almost 20% volume growth, selling around 2 million cases just in Q2. But how? I mean, how do they manage to hold an 85% market share in white spirits? That's dominance.
It really is. It's a combination, I think. Relentless innovation, for one, plus really smart market reach. White spirits generally, vodka and gin, they're growing fast in India. Used to be less than 2% of the total spirits market. Now it's over 4%.
Okay.
And Radico's kind of defining that category growth. They keep launching new things, these flavors of India variants. Jamun Spicy Mint sounds interesting. Following up on Alano Mongo and Tandai. That keeps them fresh, keeps them relevant, especially with, younger drinkers who like to try new things.
Right. That innovation pipeline seems key. And that ties into their dark spirits, too, doesn't it? After dark whiskey. Another one with just phenomenal growth, 115% year-on-year in the first half.
Yeah, the jump there is pretty incredible. It hit 1.5 million cases just in H1. Compare that to 1.9 million for the entire last financial year.
So it's on track to smash last year's numbers.
Easily. And they've expanded its footprint, now in 18 states. So the distribution strategy is clearly working, finding ready buyers.
And then there's Royal Ranthambore, another standout performer in Q2, 67% volume growth. What's really interesting there, like you mentioned, is the pricing. It's positioned above the biggest selling scotch in its segment.
Exactly. And people are buying it. That says a lot about consumer trust, doesn't it? It's not just about a foreign label anymore. They're choosing this premium Indian brand. And it even grabbed a 10% market share in the CSD channel, the canteen stores department, in September. That's a tough crowd, very discerning. So that's a real stamp of approval for the brand.
Okay, so the premium stuff is firing on all cylinders, driving that quality growth and margin. Let's pivot now. The other engine, that massive volume explosion in the regular category, up almost 80% in Q2 after, 9 quarters of it shrinking? Where did that come from?
Yes. This is where you see their sort of strategic flexibility.
Yeah.
The big driver here, interestingly, was a policy change, specifically the route to market, or RTM, policy in Andhra Pradesh.
Okay, maybe unpack RTM a bit. For listeners who aren't deep in the weeds of state alcohol policies, why does changing who handles retail suddenly create such a surge?
Right. So historically, in many Indian states, the government controls distribution, either wholesale or retail or both. It can be, let's say, inefficient. When Andhra Pradesh decided to open up retail to the private sector, it basically unlocked the distribution channels. Suddenly, it was easier to get products onto shelves.
Oh, okay.
And Radico Khaitan was ready. Because they have this balanced portfolio, they had strong brands in the regular segment ready to go. They could immediately flood those newly opened private channels with product. Some competitors, maybe focused too heavily on just premium, might not have had the right products ready for that sudden mass market demand.
So it wasn't just luck, it was being prepared for that kind of shift.
Exactly. Strategic agility.
And the result was pretty dramatic. Their market share in AP went from about 10% last year to around 30% in Q2, making them the #1 player there almost overnight.
Just like that. It really shows the power of having that balanced portfolio. But, policies, they can change quickly. What works in one state might not work in another.
Yeah, the contrast with Maharashtra really highlights that, doesn't it?
It does. In Maharashtra, prices for smaller bottles went up, maybe 80, 100 rupees, and the whole spirits market there dropped by 25%.
Ouch.
Yeah. And Radico Khaitan also saw a decline there, about 20%. So it really shows how sensitive things are to these state-level pricing and policy decisions. It's a constant tightrope walk.
But they're already looking ahead, right? The management sees potential in other states if similar reforms happen.
Definitely. They mentioned Delhi and Bihar specifically. If those states adopt reforms similar to what Uttar Pradesh did, well, that could be huge.
What was special about the UP model? What did it unlock?
The UP model basically involved privatization and streamlining the distribution system. Made it much faster and easier to get products out there, manage inventory, respond to demand. Now, imagine Bihar. Historically, that was a massive market, like 10, 12 million cases a year, and a huge vodka market, too. If that opens up with a UP-style model...
And Magic Moments is perfectly positioned to just dominate again.
You'd think so.
Yeah.
Given their current share in vodka, they'd be poised to capture a huge chunk of that potential volume almost instantly.
Okay, let's shift focus slightly again, thinking about the future, the higher-end stuff, and also how they're managing the finances behind all this growth. They have this big goal for the luxury portfolio, right? Aiming for 500 crore in revenue in FY26. That's up quite a bit from 340 crore last year.
It's ambitious, and it needs new, exciting products. They mentioned Morpheus Rare, luxury whiskey, an extension, launching state by state. And the Spirit of Kashmir luxury vodka sounds particularly interesting. Pitched as India's first homegrown luxury vodka, using Pampur saffron. That gives it a really unique story, a sense of place.
Yeah, that saffron angle is smart marketing, and they're building on the success of their existing luxury players like Rampur Single Malt, Jay's Ulmer Gin,
And Sangam World Malt, right? Those are key for margin and global reach. Jay's Ulmer already having 50% market share in India's luxury gin space. That's impressive progress.
It is. And these high-end brands, being global, they also offer some buffer against those domestic policy swings we talked about.
Absolutely. Which brings us back to the overall financials. That EBITDA margin expansion, 126 basis points, hitting 15.8%. That shows they're getting real operating leverage from the increased scale.
And the gross margin. That held steady at 43.6%, which is pretty remarkable considering that big surge in lower-priced regular segment volume from Andhra Pradesh this quarter. How did they manage that? Usually a mix shift like that would dilute the gross margin.
Well, the key factor there, according to the source, was a helpful raw material environment. ENA, grain prices, they were stable, maybe even slightly down.
Ah, okay, so the cost of the actual alcohol didn't go up.
Exactly. So even though they sold a lot more of the less expensive stuff in AP, the cost to make it was low, so it didn't hurt the overall gross profit percentage too much. If raw material costs had spiked, it could have been a very different story, even with the high volume.
That makes sense. It's a crucial point. And speaking of raw materials, that Sithapur distillery project, that's part of ensuring quality for the premium brands, isn't it? Controlling the input.
Totally. It's running near full capacity, 95%. It's what they call backward integration. By making their own high-quality grain alcohol, they can guarantee consistency for brands like Rampur and the other premium whiskeys. That secure supply is really fundamental to sustaining that P&A growth we saw, that 38% growth in the first half. You need good ingredients for good premium spirits.
So, wrapping this up, for you, the listener, tracking this sector, what are the big takeaways from Radico Khaitan's quarter? It seems like two core things. This relentless drive for premium volume, which shores up the margins, and then this incredible ability to pivot and grab huge volume when state regulations suddenly open up.
That's it in a nutshell. Which leads to the really interesting question looking forward. They've got this winning formula now. They're guiding for over 20% volume growth for the full year. Where do they place their next big strategic bets to keep this momentum going?
Right. What's next? And they did give a few hints, didn't they? More action in single malts beyond Rampur.
Yeah, they signaled more innovation coming in single malts, which makes sense given the global demand. And maybe more significantly, they mentioned entering the tequila market through a joint venture.
Tequila. Okay, that's a totally new category for them.
It is, and a high-margin, globally popular one. So that signals they're serious about diversifying into these international spirit categories.
Yeah.
So the thing to watch is how they balance these two worlds. navigating the tricky, unpredictable domestic policy state by state, while also making these steady, calculated moves into new global luxury segments like tequila. Managing those two different rhythms, that's the challenge and the opportunity ahead.
Absolutely. A fascinating case study in strategic agility. Well, thank you for joining us on this deep dive. Hopefully, you've got a clearer picture now of the dynamics driving this major player in the spirits industry.
Until next time.